Thank you, everyone, for joining us today. Jack, please go ahead.
Hello and welcome. This is Jack Sweeney, and I'm a contributing editor here at ALM, and we're together convening What's the Risk? What your client's in-practice risk management plan says about future claims. And this is a Property Casual 360 event produced and sponsored by NBIS. I'll be your moderator for this event, and before we get started, let's get some simple housekeeping items out of the way. This event is completely interactive, and you can ask our speakers questions today. If you have a question, please type it in the Ask a Question field on your console, and we'll get to it during the live Q&A. We'll answer as many questions as possible today, so we invite you to ask away. If we don't get to your question, we'll be sure to send you an email with a response. You can also go to the Resource Center widget and download the slides to your desktop if you care to do so. In addition, there are some other customizable functions to be aware of. Every window you currently see, from the slide window to the Q&A pane, can be either enlarged or collapsed. So if you want to change the look and feel of your console, go right ahead. Now let's get to today's topic and why we're all here. Managing risk on a frequent basis is the primary function of any commercial company's risk or safety manager, but you as their agent have a valuable role in leveraging the risk safety manager to prevent claims. This afternoon we'll be hearing from two experts who will be drilling down on this subject area for you. Bill Smith, Executive VP, Claims and Management, NBIS, and Art Kirchner, VP of Claims at NBIS. As Executive Vice President of NBIS, Bill Smith is a liaison with the industry associations today that work closely with the NBIS. His responsibilities include sales and marketing, claim and risk management, loss prevention, safety awareness, and accident investigation. While at NBIS, Bill developed a unique risk management support system that many credit with giving NBIS its unique edge in the industry today. Now, VP of Claims Art Kirchner is responsible to audit operations and process management he oversees today, including continuous improvement. Art has over 35 years experience in claims management with a reputation for optimization, productivity improvement, and driving excellent customer service. Bill, I believe you're presenting first today. Welcome.
Thanks, Jack, and thanks everyone for taking the time out of their busy schedule to listen to us today. We're going to take hopefully the next 40 minutes of your time and talk to you about risk and how NBIS as a casualty underwriter sees it, and the things that we do and the things that we can do with all of our agents that are out there writing this type of business. What you have in front of you today is a picture of the two of us. Jack had said something about Art's 35 years and my 35 years. We're two experienced and maybe old-timers in the industry. Art comes to you with a ton of experience from the insurance side of the program and the claim side, and I come to you with 35-plus years of experience from the program side and actually field experience all the way up through the insurance program as well. If you look at our business model, NBIS is dedicated to the industry. Did the slide switch, Lisa? We should be on slide 3.
Yep, I'm trying to get it to move now.
Pardon us while we try to get this thing working. It looks like it's up now, right?
Yes, sir.
If you look at our business and Nations Builders Insurance Service, you'll see that we have a definite dedication to the industry. We are the endorsed provider of insurance for the Specialized Carriers and Riggers Association. We've had that endorsement for going on 20 years now. That's the largest association of crane, rigging, and heavy haul professionals in the industry in the United States. In addition, we also work with and collaborate with and continue to grow with other associations like the ACPA, the American Concrete Pump Association, You'll see down in the right-hand bottom corner, our program business is specific to crane and rigging, heavy haul transportation, oversized, overweight type loads, concrete pump industry, as well as equipment dealers as a program. We are a specialty risk. We're a boutique. We're unique. We also share in the loss. We take risk sharing with our market partners. We've been doing this for many years. You'll see the coverage features in the middle. Art Kirkner, later on in this conversation, will talk to you about many different coverage features. One of them in particular is where we put the mobile equipment on the general liability for the over-the-road exposure. Some carriers will put the auto version on the auto policy and the liability side on the liability policy when it gets to the job site and does what it does, in our case, cranes and pumps. But we actually put the exposure of over-the-road combined with general liability into this single line of business. Next slide, slide 4. What you have in front of you is what we consider the risk management cycle. We look at ourselves a couple different ways. We look at us as a risk management company that actually provides an insurance policy. You'll see this slide a little bit later in the presentation when it gets down to the claim side. And here's the difference. From our focus, you'll see the risk management plan in the center, and you'll see where the arrows are pushing out. And it pushes out into the safety culture of the individual, the claims that occur throughout the policy year, contract work tickets, contract to risk transfer, and then also into the insurance policy. Now, we consider ourselves basically, as I said, as a risk management company that supplies a lot of information, a lot of detail to the industry that we insure. I myself come from the crane and rigging world. The program manager for concrete pumps, Rob Edwards, he comes from the concrete pumping world as a pump operator. I was a crane operator. And we also have Chris Nelson, who is in our company that also comes from the heavy haul and the transportation industry as well. So you'll see that we do invest and we take and promote the industry not only from outside but from within. And you'll hear a lot more about our risk management plan as we go forward. Next slide, slide 5. The difference between looking at a company as to whether it is a proactive type of company that you as a broker and we as insurers look to, or a reactive type of company, is fundamentally what we're doing. If you look at the first sentence of it, issues will occur, bad things will happen to good people, and the fact of not if, but when they occur, and you'll try to evaluate whether a company is actually proactive or reactive. Basically, what we're trying to find out here is, are they a firefighter type company that's there to put out fires, or do they work in the fire prevention mode? And anytime we can do loss prevention and the corrective nature of trying to prevent incidents from occur, that's what we're looking at. They got to have a plan. If the safety culture is not a priority, the employees are empowered, whether they're just reactive, and this attitude of, it's not my job, it's somebody else's job. I mean, they're all the things that you as brokers and agents will definitely learn as you visit these individuals. Do they have the right culture, basically, both from the top-down level of the culture as well as the bottom-up level of the culture? And I lean into that by saying, employees will say, that's not what I do, that's not my job, I don't care. That's the bottom-up as well as the top-down. Next slide.
It's time for a poll.
What we're going to do now in this next event is review risk management plan.
Billy?
Yes?
We have a poll.
We do have a poll we're pushing out now to you.
Okay.
Quick read. Being honest, how often do you check in on your clients during the policy year? Let's see, every 3 months or less? Every 6 months? About 3 months before the renewal. Let's be honest now. And again, part of the value here is you get to match yourself up against your peers, discover something. Okay. So every 3 months or less, 32.3%. Every 6 months, 36.9%. And a very honest 30.7% who's checking in 3 months before the renewal.
So, Jack, it looks like the audience, and Art, looks like the audience broke it down into a third, a third, and a third, depending on whether they're visiting the clients at what time of year, based on the policy as well that they're actually visiting, and the frequency that goes with it. So when we're looking at reviewing a risk management plan or the risk that a company is actually looking at as a brokerage and an insurer from MBI's point of view, there's many things that we look at. Evaluating the risk management plan, we've been doing this, as you saw, for years. In today's world, we can tell you that everyone knows litigation is everywhere. We all see it, or in some way, we are affected by it. Either we're in it, we're out of it, or we pay for it. Right? If you look here on the risk management side, we can tell you by experience, one of the most effective ways to manage risk in today's world is through contracted risk transfer. Now, I put this at the top of my risk management program. All the big guys that are out there do this. The petrochemicals, the auto industry, the industrial, the general contractors, the construction managers, they all do it. IRMI, for those of us on the line that understand the Insurance Risk Management Institute, IRMI pushes this process of risk management and contractual risk transfer. So when you walk into a client, a potential insured, a current insured, someone to get as a brokerage, and we also bring them in-house as a new company, we're looking at what they're doing with their work ticket, the indemnity that they have, their primary and excess limits that they have for us to be able to defend them accurately, appropriately, workers' comp, barred service. Remember, the bottom line about it is that safety is a culture. It's not a process or a plan. So we're looking at it from the top down. Does the management understand the contractual risk transfer that's taking place and how to protect it? And we'll talk about that a little bit later as well. In addition to the internal side, as an agent, we'd be looking at what they're signing and what they're giving away in this construction contractor, general contractor, construction manager, petrochem world that they actually work in. And that's something that agents can help them with. We at MBIS on the risk management side can also assist the agent in helping the insured with that same thing. Next slide. Observations for you all to look for when you walk into either your currently insured partner or a potential insured. All right, housekeeping. Take notice of the yard, the equipment, the shop itself, cleanliness, record keeping that's taking place. Security around a property. Do they have fence? Do they have lights? Do they have cameras? Things that will protect their equipment from being stolen or vandalized. The culture we talked about earlier, top down. Is it a driven policy? Is safety equipment worn by the employees? Hard hat, safety glasses, gloves when you're in the shop and in the outside area walking around. Agency data on the company you can look at prior to going there, as well as look at a new venture that you might be looking to capture, a new client you might be looking to take. And we'll talk about Ocean CSA in a second. When you do get inside, how are they keeping their records? Are they in tune? Do they have a labor management committee where the employees have say and buy-in into the safety process? Or is management driven from the top down? How long have they been in business? first generation starting up, few years, less than a couple years, brand new, been around for 40, 50, 60 years? Is it currently family owned, generation after generation, or is it equity owned? Because sometimes the culture of safety is driven by the ownership as well as the equity that's involved in it. If you're doing an OSHA search, here's an example of places to go and some tools to use. When you go to www.osha.gov, you'll take and go to the front page. You'll see it. The first arrow talks about data and statistics. When you hit that, you'll come up with an establishment search. When you hit establishment search, you'll find the line here that you'll be able to put a company's name in. Pick your company, any company you're looking at. You'll get the history of all the OSHA citations that OSHA has ever given to this company, not only in the last 3 years, but forever, because it stays, it doesn't go away. This is one tool and one way to look at your current customers and what's going on, as well as future customers that you might want to walk into, because you already have a snapshot of where they're at. What we'd like to see, because OSHA is a Bible, it's huge, it's thick, and they can probably give you a ticket anytime they walk on a job site. How you protect and defend that is up to you. We don't want to see any more than 2 serious citations in the last 3 years as a look back, just because if it's more than that, it shows a frequency. We want to work with this customer to get it right. The next place to look is CSA, Compliance, Safety, and Accountability. Here's the website for the main address to go to. You'll see this diagram that CSA has up. You'll see ways that they're going to look at carriers, inspections, and crashes coming in, and how they develop whether you are fit or whether you're an unfit. And when I say carrier, I'm not talking about just the transportation side. I'm talking about companies that have mobile equipment, wheels, and CDL drivers. If you continue on this CSA website, you can see here, this is another link. It'll take you to it. Basically, this is where you'll go to get CSA or SMS data on a company. It's very similar to the OSHA website. At this point, you'll be able to take and type in a company name. You'll be able to do a search. And if you want to drive down, if you see that little box on the left-hand side, the blue box, that'll talk about the actual company's profile, if you click on that, what it'll do is that'll take you to the next slide, and that'll actually give you a drilled-down version of all the detail of this company when it relates to over-the-road exposures for both drivers, equipment, in service, out of service, hours of service. It's one way to measure the risk that a company has. What I've done in the next 2 slides under the OSHA civil and criminal penalties is just showed you what will take place in a willful repeat, a serious, and definition and determination of a serious violation. Remember what we said, and with that comes penalties. We don't want to see any more than 2 serious violations that actually stick. Not that they get cited for it, but the final outcome is what we're looking for as to whether they can evade it or get rid of it. The very next slide is the willful citation when it is a willful violation causing death to an employee. What I'd like to do is recap here real quickly on my end about mitigating exposure. And all this is basically a checklist for everyone to take and use in managing and determining risk and trying to evaluate the exposure that you're looking at, both with current customers as well as future. Management and supervisory knowledge of OSHA laws and requirements are important because that's what they're going to be cited for and measured by when it comes to employee safety. Employers should ensure that employees from the CEO down receive appropriate training regarding safety rules and procedures. Rules and procedures should be published, understood, enforced, and accepted. The company and you are protected by your decisions and actions every minute or every day. When you get into a claim, plaintiff will be looking for all of this information: training, safety programs, documentation, and experience. Compliance with safety procedures must be monitored, recorded, documented. That's record keeping. Companies should have a system available to employees to report unsafe conditions, hopefully anonymously. Companies should involve the employees in designing training programs and ensuring that there is no retaliation against employees for the breach of good faith. Lastly, in this slide, in this checklist, employers should develop an accident response plan that establishes a single contact person to respond to requests for documents and materials that are going to come from either OSHA or from plaintiff counsel. Maintain a high visibility of safety personnel on a job site. Have weekly meetings between all site personnel to keep lines of communication open. Pre-employment drug testing and drug testing after all incidents involving personnel equipment. Require minimum number of hours of safety orientation covering job site safety rules when hired. Follow up with weekly toolbox talks. And that, lastly, but not least, is hire the best and have the right management culture. With that, I'll free back and talk about some of the things that NBIS does to help in aiding brokers and are insured in this checklist. And we're going to turn it over to Art Kirchner to talk about our lines of coverage.
Hi, everyone. This is Art Kirchner. I'm the Claims VP, as mentioned, with NBIS. In addition to my responsibilities there, I also have management oversight for all complex claims that involve the complexities of contractual risk transfer as well as the high exposure cases without regard to whether or not there's liability. So with that, what I'd like to do is to kind of walk you through how we manage the insured's exposure and how we manage the risk after a loss happens so that we can get the best possible outcome, as well as make sure that we communicate with the brokers as well as the insureds and underwriting and loss control so that a risk who may have a particular loss or frequency of losses, we might be able to help them improve that from looking at the accident and then going back and helping to improve their actual risk management plan that's in place. So with that, oftentimes it's the policy coverages that you have that determine the claim outcomes for good or bad on the insured. And one of the things you may want to keep in mind as we go through our conversation today is the fact that it's a lot easier if you think about the importance of kind of keeping your primary coverages with the same type of market. So particularly like, say, with NBIS, if you have the GL and the auto primary, your inland marine, we have the claim examiners who are assigned to accounts. They understand the risk in that regard. They understand where all the coverages are. It minimizes the risk for any potential coverage gaps, and plus it helps them understand the client operations. So you may wish to keep that in mind. The excess, obviously, you all know, covers the shortfall or the limited lower limits that are associated generally with the primary coverage. And it's very important, as you'll see as we go through the conversation, that there are adequate limits available to protect the insured, and also that has a derivative benefit to you as the broker. And also keep in mind that BOP policies, they don't contain the kind of language that is unique and provides as much coverage as possible as the policies that NBIS and our market partners provide. So I just think that that's important to keep in mind kind of as a health check. I do want to talk to you about some of the things that we provide by way of coverages. Billy touched on some a little bit earlier, but our policies provide, our GL, for example, will provide care, custody, and control while a load is on the hook. Generally, that is excluded, but we understand the unique exposure that our insureds have, and we do have that coverage available under our GL. Our excess, clearly provides the following forms, which are primary and non-contributory. We also have options for following forms for rigorous liability, and we also have follow form for over-the-road primary coverage, particularly for our boom trucks and mobile cranes and concrete pumper trucks. So we understand what the insureds need by way of protection. And I also want to point out the fact when you speak about excess coverage and protecting the insured, NBIS, through our insurance market partners, we can provide beyond the $1 million primary limit, we can provide a $5 million umbrella, and then over top of that, a $5 million excess. So you basically get $11 million worth of protection. That's a pretty doggone good capacity for you to think about, given the exposures that crane and rigging and heavy haul have. What I'd like to do then is to talk about the NBIS difference from a claims perspective. And you can see that we provide industry-specific claim service to our clients. In the event that there is a loss, we actually explore the complexities associated with the coverage contracts, how the risk would shift given a indemnification contracts, and also our losses involve multi-defendants, and you really have to know who has responsibility for what and how they all will contribute to a loss. OSHA enforcement and how that will impact liability, their findings and their reports can be submitted into evidence in very many jurisdictions. And so one needs to understand what the implications are. Billy talked about that earlier. And so we pay particular attention to that. I would also like to point out then that when you see this, when you take a look and you have a loss and you look at the claim that occurs, the insurance policy, we get back to the broker, to the insured, underwriting and loss control, and all of that comes back to the risk management plan to say how can we then tweak the risk management plan to make it better so that this is a good insured as we continue forward to minimize loss even better than what the current risk management plan might do. With that, we have, in the event of a loss, and we'll take a look at it when it's reported, and if it's a catastrophic loss, NBIS is unique in that we have a rapid response and early recognition team that's led by Bill Smith, and given his experience as a crane operator, he is a he is a commissioner on the National Committee for Certified Crane Operators. And so he also helped co-develop the B30 standards, which I'll speak to. So we bring an added dimension of expertise that can get rapidly deployed to an accident site. And on top of that, we also have on staff certified forensic investigators. Not an easy designation to get, but those folks go out and know and can get to the heart of a cause of loss very quickly and determine whether or not the exposure is a result of our insured's operations and negligence, or is it the cause of somebody else for which we might be implicated. And that's very valuable in the early life of a claim. In addition to that, we use all the risk management tools that I will share with you, some of them, and as much as possible to their fullest extent, and there are actual financial benefits to the insured's loss outcome by us doing that in the claims department. And on top of that, no risk management plan, no underwriting, and effectiveness of the risk selection can occur without timely and regular communications between the claims and the underwriting folks and the broker, and that is what we add. So I think we have a poll question now.
Yes, we do. We'll be pushing it out now. How much involvement do you as the agent have in your client's claims? Not much. Notified of occurrence and status updates only. Fairly involved. Work with client to review status and activity. Very involved. Actively working with my client and the claims adjusters until resolution. Let us know. How much involvement do you have? Okay. Well, 25.8% of the audience tells us not much, notified of occurrence and status updates only. Almost a third say fairly involved, work with clients to review status and activity. Finally, 43.1% say very involved, actively working with my client and the claims adjusters until resolution.
Am I good to go now?
Mm-hmm.
Thank you. I think that's absolutely terrific. If you just take a look at the hard numbers, 76% of the folks who answered this question, you're either fairly or very actively involved in the claim process and the resolution of it. I can speak for claims very clearly. We welcome that. We enjoy that. And not only do we find that informative and educational, but it also sets expectations and it minimizes surprises. And no one wants to be surprised in this business, if at all possible. And with that, what you'll see now is this is just a picture of a loss that occurred. It involved a alleged oversized load, and the implication was that our insured crane operator attempted a lift that was too heavy. We went out to the site within 24 hours of this loss. We were there. OSHA was there. You can see on the left side, the crane is tipped up on its toes, and the plates behind the cab actually flew free from the tray, crashed through the cab, and actually, unfortunately, killed the crane operator. Obviously, there's implications to the site people for safety concerns and conditions. But what we did was when we heard about this loss, we got out immediately and we took a look at the property damage. We took a look at the circumstances of the accident. Come to find out, this turned out to be a rigger's liability and not the insured crane operator's fault. And on top of that, we were able to also find out that there was a possible manufacturing defect. And so the important thing to know here is we have a rapid response team of key experts that get out early on in the life of the claim, identifies the exposure. We're able to communicate back to the broker and the insured as well as underwriting that we didn't see the exposure coming back to our crane operator as being at fault. So that's the purpose, and that's the added benefit the NBIS way provides. The other thing is we have an early alert system that when a loss does come in, that it's unique to our early alert system is unique to the industry and it's unique to our client base. And so, for example, if we see the term tender or we see the term master services agreement or we see collapse, those types of things, or load off, load or rigging fall. Labor Law 240 is an example. That is immediately alerted to management, and we're able then to determine what action needs to be taken early on to assess that exposure. That internal alert process minimizes surprises as we go forward. We then communicate that out to see if loss control would be involved. We certainly alert the underwriter and the broker as to the potential exposure based upon that early alert and that early investigation, given the eyes that are watching that kind of a loss. Secondly, we take a look at the risk transfer possibilities, and I'll share a little bit more with you on this point, but we asked the question, was the NBIS preferred contract used? If not, then we would alert loss control, we would alert underwriting. It is an extremely beneficial document. That contract basically contains favorable indemnity language, it contains favorable additional insured language, and so forth, and that by using that contract, the liability can be transferred to the person who leases the insured's equipment in this particular case, or leases the crane and the operator of it. We also asked the question of, is there a master services agreement and what are the implications? This is kind of what we allude to as the insured has no liability, but because they are a party to a master service agreement that the owner and GC require them to be signed. We understand it. It happens in the business. But what's the backdoor exposure in the event that that the general contractor should get sued? What then is the backdoor exposure given that indemnity that comes back to the insured under such an arrangement? And then you have to pay particular attention as to when is that master services agreement effective? Does it supersede contracts prior to the date of the agreement, or will it apply to contracts including after the date of the master services agreement? And that's very important to understand, because we could have a preferred contract in place that shifts the liability over to the person who leased our crane and operator. But then because the master services agreement, it will come back to us. But if that master services agreement only applies to the date contracts prior to the date of the agreement, then our preferred contract is still in full effect, and we get the benefits from that. So that's the kind of talent and expertise we have in our claims operation that manages the risk and identifies the exposures that comes back to us via those master services agreement. When we find out that we have a tender situation under our own contract where we can go back after the client's customer, we speak to our own insured, we let them know of the fact that we do have a tender situation and that their customer owes our insured a defense and an additional insured obligation, then we alert them and say, look, we understand the value of your customer relationship, but we are going to have to pursue the indemnity. And so we do that, and we're aggressive at it. And if our tender is turned down and we don't think it has merit, then we will obviously seek a breach of contract against the AI carrier in that situation. We alert loss control if our contract is not used. We alert underwriting. And NBIS has in-house legal that actually works to make sure that our contracts meet the local state laws as it relates to indemnity, as it relates to the additional insured obligations and so forth. So we do provide that benefit to you as the broker and to our insureds. Our preferred contract provides certain key points. Obviously, we talked about the indemnification and transferring the risk to the person who leases our cranes and operators. The additional one is it contains additional insured requirements with minimum limits for both primary and excess. Usually it's $1 million primary and a $5 million excess. We also have workers' comp subrogation waivers in the event that the workers' comp carrier wants to sue us, and if it's not prevented by statute, our provision bars that workers' comp subrogation. So it provides kind of like an offset then that they can't come after our insured to recoup their workers' comp benefits. And we also have what the technical terms that pertain to borrowed servant, or you might be familiar with loaned employees. And that's really where the GC, or the lessee in this case, controls the hours that are worked, controls the pay, and then that makes that our insured's employee actually becomes a borrowed servant or a loaned employee for which they would, of the lessee's company. So where that's permitted, our contract allows that to occur. You want to talk about the effectiveness of this kind of a preferred contract, this kind of a risk management tool with our insureds using the NBIS contract? Over the last 18 months, our insureds were involved in various litigation in which there was $105 million paid in settlements. And because these insureds had the preferred contract in place, they paid $0 because we were either dismissed from the litigation voluntarily, our tender was accepted and somebody else paid on behalf of our own insured instead of their policy. And we spent $1.1 million in legal expenses, and to date we've recouped $510,000, and we're actively pursuing the balance of that with some carriers, and we're very confident we'll recover. So that's the power and the effectiveness of using that tool. If not, our insureds would have been facing approximately $23 million in contribution to that settlement pool. So I think that when you talk about benefits are good as long as you make sure that there's an effective outcome that goes with the use of the tools. Additionally, the ANSI B30 standards, basically, and Bill Smith that you heard from, he actually helped co-develop these standards, because generally in the past it was if it happened with a crane, the crane operator was at fault. But generally, now with these new B30 standards, it really defines the responsibilities of the crane operator, the rigger, the lift director, and the site supervision. And those are really the four primary areas where we see the loss exposure occurring. We make maximum use and aggressively utilize the B30 standards as it's involved in a claim. Our lawyers understand it. They actually use it to educate not only the plaintiff's lawyers but also the judges. We submit that as a reference to evidence in our pleadings, and we've been very effective with that. We've actually saved almost $800,000 using the B30 standards that point to who has responsibility. In this case, it might be a rigger's loss, and they try to come back to us as the crane operator being at fault. And we say no. We use the B30 standards, and we've been able to avoid and or save $800,000 in loss exposure just using the B30 over the last 6 or so months. And what's interesting is 85% of the B30 standard, 85% of the purchases are by lawyers. So we are skilled in this. We have a worthy opponent and an adversary who understands it, and so we're able to go toe-to-toe with them when it comes to negotiation and assessment of liability, and they can't scare us, for want of a better word. And if you wish to, you can go to the ASME website, and you can purchase the B30 standards and have those, become familiar with those, and share those with your insured. So one thing I would like to say before I move on quickly here is I just want to remind you that you may want to set aside June 3rd. That's our next webinar, and it's going to cover what's in your contract. And so you may just want to say that if I can do a little advertising for that website, that webinar. So with that, I would like to kind of wrap it up with the timely and regular communications as being a vital part of this process. And not only do we have the underwriting and loss control alerts that I alluded to, we have regular reviews with active accounts and the broker's participation. And not only is it informative on a regular and periodic basis as losses emerge or new information comes in, but it's also educational. We explain to the insureds why they may have a legal obligation, and then is there anything in their risk management plan that we could do to perhaps strengthen or transfer that obligation. And we find that to be very beneficial. It reduces surprises on the part of the insured and the broker when it comes to any changes to the loss exposure, and we timely communicate that with them. I also then would like to talk about our team approach in handling litigation. It's an early defense and recognition of what our strategy should be. It includes the claim examiner, it includes our experts, it includes our defense counsel and management. We get on the phone regularly and have periodic reviews of the complex cases that are in litigation. We're able to help manage the sympathy factor because obviously we don't get a lot of frequency, but when we get a big one, we get a big one. And there's a lot of sympathy associated with it, where you get involved with fatalities or folks that end up being paralyzed or perhaps lose a limb. And the bottom line is we're able to manage through that sympathy and be able to orchestrate our defense plan accordingly to get the best possible outcome. And we've been very successful. And what I'd like to show you now is you'll see a slide that pertains to an oversized load that our insured was hauling. And we had a pilot car in front of it. On the left, you can see it there. And then you can see coming into the behind the pilot car is our power unit and trailer that's hauling this large turbine. And unfortunately, the lady that was driving the SUV, she wasn't really paying too much attention, ignored the pilot car, and at the last minute she attempted to make a left turn up at the upcoming intersection, and she turned into the back end of our trailer. And she died as a result of this accident, and she left a number of kids. But the important thing to say about this is this shows you the extent of which you may have some serious sympathy in play, but when you work in terms of your team approach and keeping everyone informed and on the same page, it really shows how we're able to effectively defend and our insured and get the best possible outcome. And we make sure that our defense attorney and us and the claim examiner and the insured and the broker are all on the same page. And even though we this example that involved a past fatality, it was, we had everybody on board with a very good outcome. So I'll conclude by saying that NBIS, with our folks who are very knowledgeable, have the expertise to manage these losses. When we do get a bad one, we do the very best that we can with our skill and talent to actually keep the exposure to a minimum. We use all of the tools, the preferred contract, the B30 standards, and I would encourage you to go over those with your insureds, particularly our preferred contract, and then also on top of that is to continually reevaluate the safety plan and risk management plan that's in place. But I thank you very much for your time now.
Well, what I'd like to do is conclude with a couple slides. As I started out at the beginning, we look at ourselves as a risk management company that provides insurance policy. You'll see that we put together a risk management support system, RMSS. It's valued in the industry. Every one of our insured, every single insured gets a program, whether it's in the crane and rigging side as a support system, a transportation side with Chris Nelson as a support system, and a concrete pump side with Rob Edwards as a support system. We believe in investing in our program, this program, and this industry. We are definitely dedicated to it. You'll see on the next slide, our kit consists of the contract management piece that Art talked about, both yours and others that you'll sign. The B30 standards that we just talked about gets delivered to every single insured, whether it's in a crane and rigging or a pump side. They're two different standards. OSHA regulations that pertain to the industry. We provide them with a short, small safety program. If they don't have one, they should have one. We put it in play. Toolbox talks. There are weekly events. A return to work policy, a light duty type policy to get people back to work when they're injured, a root cause analysis, the 5 whys that are answered, and a claim reporting, lessons learned, ways to prevent it from happening again. Additionally, NBIS invests in a driver training program that's internet-based. The drivers do it at home. And here's the bottom line. We believe in contract risk management transfer and driver training so much that we offer a 50% deductible on their on the policy, so it's half off of their deductible if they have the right terms and conditions of a contract signed in place at the job when they go, which is their work ticket, or on the driver training side, if their drivers have invested in the program and went through the course and passed it and have an over-the-road exposure on a piece of mobile equipment, and that driver went through the program, they also get that same 50% deductible as well. What I'd like to do is conclude with the last slide for us, which is our contact information. If you need to get a hold of myself, Bill Smith, or Art Kirkner, this is our email addresses. And also from the broker side, any submissions that you want to have or supplemental app, you can send it to either my address and I'll get it to our underwriting team, or definitely the one way to get it is through submissions@mbis.com. This concludes our presentation as far as the information we do. Like I said, we know the industry top to bottom. We're from the industry. We're a risk management company, and we're here to help brokers grow your business and protect your clients as best we can. Lisa, we could go to questions.
Excellent. Well, we do have some great questions at the top of the queue, and if you haven't yet directed a question to Art or Bill, please take a moment and just pop one in the pane, and we'll be able to ask it in real time to them. Again, they're both here today, so it's one of those unique opportunities to get answers to your questions in real time. Top of the queue, you mentioned risk management as a service after the policy for NBIS policyholders. Can you elaborate on that?
Yeah, I guess I'll take it quickly. You saw throughout the presentation that we believe that loss prevention, loss control is the key for the insured to maintain their low premiums if they can, stay out of trouble. And also for us on the claim management side, the tools that you give us to fight with, what we call the bullets in the gun, the more you give us, the more opportunity we have to shoot at our defense, naturally. So outside of the policy itself, the risk management kit we send, what Art had talked about, we have an in-house team of lawyers that will take and redesign a work ticket for individuals that either have one, or if they don't have one, we'll give one for the contract risk transfer. We'll work with them on any other upper-tiered contract they're forced to sign to try to limit their liability and limit the additional insured exposure that they may have as well. We do site visits by a third party. We do an internal audit. We can do a OSHA inspection, a mock audit, and we could do a driver inspection, mock audit as well, just to see where you're at with your driver's side and your on-road and your DOT compliance. So there's many things outside of the policy and after the policy the NBIS policyholders get from NBIS as a partner.
Next question. Somebody asks, what do you suggest is the right level of engagement that agents should have with their clients about claims? What is that right level of engagement?
This is Art. Actually, welcome that engagement. And I would recommend that if you're involved with a serious loss and you need to track that, I certainly think that tracking it on a quarterly basis with your claim department would be good. And that's sort of what I would recommend, because obviously it's going to be covered off in renewal. If you have a very active client, a large client, I would certainly encourage you to participate in periodic loss reviews where you can cover off certain types of claims that are occurring, and you'll find that the informations are beneficial. Those could be set up anywhere. We roundtable certain clients depending upon the size and the frequency. We'll roundtable quarterly, once every 2 months, depending upon what we're dealing with and the respective schedules of everyone involved. So that's what I would recommend, but I would have it be tempered with the magnitude of the loss that you're dealing with.
Okay. Next question. Can my clients receive a mock OSHA review of their operations to validate or invalidate their risk plan? Again, can my clients receive a mock OSHA review of their operations to validate or invalidate their risk plan?
This is Bill Smith, and the answer to that question actually is that we do it internally. We have 2 individuals that are OSHA 10 and OSHA 30 certified as well to go out and visit clients. We also use third-party vendors that we use to do a OSHA mock audit and as well a DOT mock audit when requested and when needed as well. Anyone can look at themselves, but it's nice when you get a third-party individual come in that's totally objective, just to look under the hood, take a look at policies, procedures, record keeping, keep you on par as to where they think you should be in the event that OSHA were to walk in your front door or DOT pulls you over on the side of the road, and then eventually DOT may walk in your front door as well. So, yeah, we can do it, and it's a great thing to do to get a review, just to have a quick check on where you think you are compared to where you actually are.
Okay. Somebody asks, based on this presentation, it would seem that the greatest potential for agents to start getting involved is the risk management plan. But what other areas are the best places to start, in your opinion?
Art, you want to take it or I'll take it, but here's how my answer to that question would be. The best place to get the greatest potential for any agent to get involved in any company is just like we said in this presentation, through the risk management plan. Take a look at OSHA, take a look at history, take a look at where your current clients sit today, because you may or may not know what's going on in that case. Take a look at future clients that you want to bring into your business. See where they are before you walk in the door. Take a look at the CSA scores, where they stand compared to the industry relative to everyone else. What you don't know what you don't know. Naturally, the good thing about NBIS partnering with agents is that we will also co-brand and co-market and help you with the material to be delivered to your clients as well as any other future clients out there. I believe that the risk management plan that we've outlined, the safety culture, the investment, the circle of influence that we talked about, the contract management, the litigation side, and the other systems that we presented to you twice earlier about an inside view and an outside view of the risk management plan is all tools that any agent can use. That checklist is a great checklist for people to get started, whether you go in. That observation list is a good observation. But that will determine the loss potential and the risk associated with that particular culture that exists within that gate.
This is Art. If I just may piggyback a little bit on what Billy said. One of the things you may wish to take a look at with your clients as a good starting point might actually be to take a look at where are all their policies and where are all their coverages. And do those coverages fit some of the more unique exposures? I'd mentioned the care custody control exclusion that we do not have when you have a load on the hook. The other thing is there sufficient capacity beyond the primary limits that would protect the insured, given the magnitude of the insured's business assets, the assets of equipment as well as his own personal, as well as his own the value of his own business. When you get some of these losses involving iron workers who can't go back to work, et cetera, is there sufficient capacity? And NBIS, as a managing underwriting agency, works with our insurance markets to provide a really great capacity of excess limit protection to the insured, and that may be something you want to look at. The other things is to ask the insured up front, what type of contracts are you required to sign, are you obligated to look at, and ask them to show you who is asking them to sign what type of contract when they go to get on a job site, and in turn, what type of language do they have on their, we call it a job ticket, you can call it a purchase order, a lease agreement for the equipment, a crane operator, and what agreement exists in place, and if you're dealing with transportation, are there pilot cars involved, and what type of contracts are involved that would involve the insured there. So I would encourage you to take a look at a few of those things at the start of the process. And keep in mind, NBIS Corporate Legal does add the value of reviewing contracts to make sure that they get the best outcome in terms of transferring the risk.
And I'd like to just add one last thing for agencies out there, and we're an open market for the brokerage side, to partner yourself with we're an NGU, as you guys already know, and we partner with some highly financially backed A-plus heavy rated carriers. And because we also take risk, we're a TPA, a third-party administrator of all claims. When you can write the policy up front, knowing the business, and then protect that policy on the backside, handling the claim, that's a great service added in a loss prevention for your insured. But here's one thing that many probably don't know is that we have partnered with companies where we handle the claim on the primary side, and our general liability carriers and other carriers have given us the $5 million extra to $1 million and given us the opportunity to handle the claim all the way through the excess layer of the $5 million, and possibly the other $5 million layer on top of that, we're going to handle the claim through. As Art said, we have the ability to provide $11 million of coverage with market partners, but we're going to handle the claim through the whole $11 million as well. What that does is it allows us to manage that claim based on factual evidence, not emotional evidence, and stop the hammer letters from coming in. So it's a great program and a great partnership to have for brokers and agencies that are out there as well to protect their clients when their clients didn't do anything wrong. They're just a victim of the situation is all it is.
So we have one last question before it's the top of the hour. How do you balance risk management with potential E&O exposures as an agent? If you're too involved with risk management, can you be held accountable for failure to address claims with an insured?
Well, I can tell you how we do contractual risk management, we do contract risk transfer, and we get legal advice. Because of that, we have an E&O policy. The brokers out there that are doing the same thing have E&O policies as well. We all got that. The biggest part of it is be a professional in what you do, research your advice, engage with your partner, and give them solid, sound advice. You won't be charged for doing anything wrong if you're doing the right thing. Naturally, if you give them bad advice, then you have a challenge. But we have two actions out there. As a broker, you can offer a ton of services to your client and be protected with a policy, which every agency has, or you can elect not to offer any services and let the insurance carrier try to provide it, but that's not taking and being your best market partner for your insured. Whenever you have an ability to make them better at what they're doing, you should always try to make them better at what they're doing and not worry about the fear that if you didn't do something 100% or do it exactly right, then you might be charged with an E&O charge. We take a lot of risk. We all have insurance. They have insurance. You provide insurance, but that's the business we're in, is taking risk. And our position, as I said before, is we invest in and we are dedicated to this program, and we're not afraid and we're not worried about taking risks to make people better at what they do.
Well, I think that's about all the time we have. Thank you for joining us. We hope it was valuable to you, and special thanks to our speakers, Bill Smith and Art Kirkner of NBIS. Thank you, NBIS, for your support in making this possible. If you missed any part of this presentation, remember it'll be archived shortly, so you can view it again or refer someone to it. Remember, you can also download the slides today. This is Jack Sweeney for ALM. Have a great afternoon.